Celsius Holdings. This is a stock. Look at this one. Public count, we're up $85,000 now, almost $86,000, up 88% on the stock. Not as big of a conviction buy for me as AMD has been, but a buy nonetheless, in a good sized position and one that's performing very well. So what's going on with Celsius? Well, I have some very exciting things to tell you that are going on right now in regards to Celsius and how sell-through is going of their drinks. Check this out. What I'm showing you right now, this is Beverage Nielsen winners for the latest Nielsen data. And they found that Celsius was one of the biggest winners. They also had Vita Coco and Michelob Ultra in there. Energy drinks shined bright in a release of new Nielsen data that covers a wide array of retail channels, including food, D-Rug, mass merchandisers such as Target, Walmart, dollar stores, warehouse clubs like Costco, BJ's, convenience stores, liquor stores, e-commerce platforms like Amazon. So what's going on here? Well, total energy drink sales were up 15.3% for the 4-week period ended June 14th. Remember, all this data kind of lags a little bit, because this is like the newest data that came out. Sugar-free energy drink sales soared 30%. Very bullish for Celsius. Quote, across our beverage coverage universe, on a relative basis, the sequential data appears more favorable for Celsius given acceleration in brand Celsius and Alani Nu. Alani Nu is a new brand they just bought very recently. It's been a very fast-growing brand. Highlighted JP Morgan analyst, Andrea, Celsius recorded a 42.1% year-over-year sales increase for the Nielsen tracking data. Insane, right? Now, the big pop is mostly attributed to the addition of the popular Alani Nu brand to the mix. Celsius market share position came in at 15.9%, almost 16% market share position, its highest ever. And I think Celsius is on its way to becoming a 20% market share player. So, very bullish in regards to Celsius. Now, the thing you got to understand about Celsius and the stock, you know, this is a stock that you could have bought for $20-something, like low 20s just a few months ago. Why is it now 45? Well, the game's been changed with regard to Celsius. Like, Celsius was in a major downtrend, right? Sales were just getting worse and worse and worse. But now that we're looking at our charts feature on 1000xstocks.com, this is just the revenue tab. You can do quarterly or trailing 12-month. Look at what's expected to happen to Celsius's revenue now at this point in time over the coming quarters. We've got a fundamental change in Celsius' business model. Not a small change, a fundamental change. Because Celsius brand is going from decline in sales to now an uptrend in sales. Additionally, the Alani deal that has just gone through recently, that's going to add so much fuel to the fire for essentially this stock to move upward from here. And so in regards to the revenue for this company, for now that the Alani deal has gone through. So the moral of the story is the company's fundamentally changed. They're like, this is not a small change. This is a fundamental change for the next many years. And that adds a lot of excitement around Celsius stock in general, right? And so Celsius, will it continue to perform? Listen, it's as simple as this. If this Nielsen data keeps coming in good, yes, the stock will continue to perform. It'll perform tremendous for a while. My guess is, could Celsius eventually take out all-time highs, which is around $100 a share? Yes. I don't think it happens all at once. That'll be a gradual recovery, right? But it's got a long runway of growth ahead. And so, the story with Celsius is pretty darn exciting. Next up here, Palantir. So Palantir was down huge. Position that we've done tremendous on. The public count up 1,673%. This is one that went down over 9% on Friday. So, in regards to Palantir, this is a very interesting time period in regards to Palantir stock history. Because just this week, Palantir stock hit a new all-time high, right? And I was reading through comments, just kind of seeing what the vibes were around Palantir. And you got guys like this. He says, my investment guy recommended me this at $17, and I passed. I want to first know who his investment guy is that recommended it at 17, man. Should have been buying at 5, 6, 7. But 17 is not bad. And I passed because of conflicting reports from writers and commenters and from readers. I could not muster enough conviction to buy, and now I sit here and ponder the what ifs and should have. That's why you guys got to learn this game. Guys like this happen all the time. Oh, I heard this stock was going to be great, but I didn't buy it because I didn't know. Dude, maybe you should have done a little more research. Maybe you should have ran projections on Palantir. Because Palantir was a screaming buy at 17. Was it as big of a buy as it was at 7? No. Or 6? No. But it was still a screaming buy at 17. If this man knew what he was doing in the market, if he understood how to value growth stocks, if he had access to run projections on a company, he knew how to do that, right? Which you can learn all through 1000X. Make sure you take advantage of that sale because you don't want to be like this freaking guy. Dude, he would have made so much money, it's ridiculous. But instead, he was lazy. And he was just reading through some comments. He was reading through some articles. And he's like, I don't know. The world is yours. It was right there for him. It was right there for him. But he chose, I don't know, laziness. Like instead of doing more research, instead of running projections, running numbers, like, come on, man. These stories happen all the freaking time. You know how many people are like, man, AMD was down to 70 something back in April. I should have bought, right? But I didn't know. I read something bad about AMD. And people were complaining they lost money. It's like, dude, maybe you should have done the work. Well, Celsius, I should have bought it. You know, like Elf. Oh, man, Elf. That was back at $49. I should have bought it. Like, maybe you should have done a little more research. Should have ran some projections, you know. Whew, you miss out on these opportunities. It's crazy. This person says, great for insiders to cash out in regards to Palantir, right? All insiders are heading for the exits. NVIDIA CEO just sold 20 million shares. You know, this sort of stuff. I mean, there's always going to be a negative sentiment. And it's not like they don't have a fair point there. It's just like there's always a lot of negative sentiment when you have stocks like Palantir that people have made fortunes of money on. Like, I mean, just the amount of people in my private stock group alone that had made between, let's call it, $25,000 on Palantir to potentially several $1 million on Palantir is a long list of private group members. Like, I see how many people have major positions in Palantir, and the amount that just made fortunes over this past few years in that stock is ridiculous. And so when you have a lot of success in that, some people, they get a little jealous. And once again, not to say, you know, insider selling is like not something worth mentioning, but I'll tell you, a lot of people bring that up because deep down inside, they're very jaded. They see how much money people have made and they think, why can't I freaking made that money? Like, they made so much money, like, you know, and I get it. But in regards to Palantir, this is very simple. Let me put it to you like this in what's going on with Palantir stock and where the stock's headed. Listen, the stock trades at a ridiculous PE ratio. The trailing 12-month PE's in the 500s, folks. Normal stocks trade in the 20 to 28 range. Now, you can say Palantir doesn't deserve to trade anywhere near normal because the growth rates are much better. 100% fair. 100% fair. But when we're talking in the 500s, that's ridiculous. You need great news after great news after great news after great news to come out for Palantir. Like every single day for people to say, I got to go buy more Palantir. I don't want to sell it when you're trading at a 500 plus P ratio. We even look at it forward P. The forward P is in the 200s and the 2-year forward P is in the hundreds, right? That's 2 years out. I don't know what other way to put it. Like, Palantir needs to be perfect at all times. There could be nothing negative coming out about the company. Everything's got to be great. It's all got to be great news. And then in regards to the numbers, listen. Next year, a lot of analysts have this company only growing revenue at like 23% next year. If Palantir only grows revenue 23% next year, the stock's crashing, folks. We're going to see a 60, 70, 80% downward move in Palantir stock. If that company only grows low 20% from where it's reached highs recently, this company needs to be growing 40% plus revenues per year for several years to go in the future. Even if it went down to 30%, way too low. We're crashing. Not as dramatic as if it went down to 23%, but the moral of the story is Palantir's got to come in with ridiculous numbers for the next several years to justify the valuation. If we get any glimpse that that's not going to happen, the stock, as Elon Musk would put it, will get crushed like a souffle. It'll be a croissant that we go like this. And it's done. That's what will happen to Palantir. But for now, you know, as long as the numbers keep coming in good, 40% plus revenue growth, it's going to be hard to get the stock down in any meaningful way. And when I say meaningful way, I'm talking about like under $100 essentially, right? Now, ELF. You want to talk about the hottest stock probably in the whole entire stock market last few months? It's ELF. Look at the move since April 17th. The stock is up 152%. A shocking, ridiculous, insane amount, right? Now, You know, I've held ELF shares for many, many years. I have shares in the public account that I've held since February 27, 2019. Whew. It was a good day to be buying ELF stock. Back then, the stock was $7.28 back then, right? And I only put like $7,000 into the stock in terms of these shares I have here. And I mean, the shares, that $7,000 is now worth $126,000. Absolutely insane. So ELF's been a tremendous performer, one of the most well-run companies of the past, I would say 5 or 6 years in the entire stock market. But the thing is with ELF is you see that gain, but you've had such a great opportunity to make a lot of money. This is a position I started in the Patreon portfolio a few months ago, right? And we're already doubled up the money there. We're already up to 115% gain in regards to ELF Beauty. It was a tremendous buying opportunity ELF gave us, obviously, in the springtime, right? Now, with ELF, you got to understand, this is a very similar phenomenon that Celsius has been going through. This is like Celsius 2.0 with a side of tariffs, essentially, okay? But essentially, remember what I told you about Celsius. Celsius, like numbers going down, then it looks like the core business is coming back strong again, and they got the big acquisition, so that's going to boost numbers up in a massive way. Guess what's going on with ELF? The same exact situation. ELF numbers getting worse. Now it looks like likely in the back half of this year, ELF's numbers for the core business get better, but then they just announced a road acquisition, a month or two ago now at this point in time, right? And that's going to be a massive catalyst to boost numbers up in 2026. So the same phenomenon we talked about earlier with Celsius is basically happening right now with ELF. And so what you're going to see in 2026 from ELF is massive acceleration in revenue growth. And remember, they talked about going up on their products like $1 or something like that because of tariffs. And like I always told you guys, like people aren't going to stop buying ELF because they went up $1 on the product. That's not how it works. You just don't have a great alternatives that are priced in the price points that ELF is. And so ELF's going to put up tremendous growth for their brand again in 26, right? And probably even starting the back half of this year, but 26 is a real year. And then the road acquisition goes through, numbers are going to be flying in 2026. So people are positioning ELF before that, right? But remember, I talked about we got a side order of tariffs in regards to this whole situation. And the bottom line is with the tariffs in regards to China, right, is it's not as serious as it was. That's the bottom line in regards to that. The two sides have their tariffs set for now. Eventually, they'll probably get more of a concrete deal done. It's not right now, though, right? But the moral of the story is, you know, when everybody was freaked out about 140 and 160% tariffs, that's long over now at this point in time, right? No, you might say, well, Trump could change his mind. He could go back to 145% tariffs, all these things. Look what he just did with Canada. I mean, the whole Canada situation is, in my opinion, I think that's just Trump kind of doing Trump stuff like, you know, I'm terminating the trade talks with you, China, or excuse me, Canada. Like, that's just the type of stuff he does. And so could he go back and do something like this? And next thing you know, we got 140, 150% tariffs on China again? Potential. But it seems like he's already done the big fighting with China now at this point in time. And it's just about trying to work out a deal now at this point in time. So that's my opinion in regards to that. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Okay, next up here, Tom Lee.
And overall right now, because we're looking at both the S&P 500, the NASDAQ, and the NASDAQ 100 all closing at new highs again on Friday. It's the best quarter for technology since the second quarter of 2020. What's happening and how do you see this playing out?
Well, this is still the most hated V-shaped rally. And it, of course, has a lot to do with when stocks fell in a waterfall decline into April. Nobody likes to be sitting on stocks. So a lot of folks liquidated at the lows. But we know that whenever the VIX is above 60 and falls below 30, you've made a decisive low. And now visibility is better. Tariffs aren't as bad as we expected, and the inflation impact actually has been.
And if you follow me on X, and obviously I was talking about this on the YouTube channels, right? But Tom Lee started to follow me on X in the month of April. And do you know why Tom Lee started to follow me on X? Because I was posting some very, very good information regarding the VIX. And when the VIX hits certain levels, it's always been a buy. Never has it not been a buy in the history of the VIX, if you go back. And I was posting that data on my X page. I was also talking about it on YouTube, on the main channel, here on the reaction channel. But I was posting on X back then, and Tom Lee decided to start following me on there when I was posting some of that stuff, right? By the way, if you ever want to follow me on X, it's always linked in the description area down there if you do use the platform. But the moral of the story is here, okay? If you want to know when it's always a great time to buy stocks, VIX goes 50 plus, it's always a great time to buy stocks. 30 plus, good time to buy stocks, but you might get a better opportunity. But just because you might get a better opportunity, don't always bank on that opportunity. So you want to still be deploying pretty heavy when the VIX goes over 30, because the VIX might not get to that 50 plus level. But if it does, if it goes 40 plus, you better be just flooding cash in the market. And if it goes 50 plus, you better be buying with us. That's the time you just got to deploy all the ammo you got. When you see VIX going 50 plus, when it's made that stair step from, usually what happens, it will go from whatever level it's at, 12, 15, 17, whatever, hits at 20. Okay, that's a level that starts getting interesting. You see 25, okay, now we're getting really interesting. 30, all right, we got to start taking this serious. We got to get deploying. You start to go 40, you better be flooding the market with cash. And 50 is like, you go VIX 50 plus, whatever I got left for ammo, get it out there, right? Because usually within a few days or a few weeks of hitting a 50 plus, the market bottoms. So, it's rare. It's rare it even gets to 50 plus, but man, if it does, you got to take advantage. You've got to buy that dip heavy.
Very muted, and actually outside of tariffs, underlying inflation's actually much lower than people expected. And I think the Fed is, even if they're holding now, the bond market doesn't believe it. If you look at the 2-year, they think the Fed's 2 cuts behind. The 10-year is now down to 4.2, which means the Fed can be more dovish in the next 12 months, and that's a tailwind for stocks.
Can you explain how we have this big, beautiful bill, which people are saying $3.3 trillion added to our deficits and everything else, and yet you're looking at the 10-year coming down?
Yes. It shows you that markets don't view the U.S.'s debt sustainability purely as its budget, because I think there's a lot of hidden value on the U.S. balance sheet, from natural resources to buildings they own to the value of gold is undervalued. And in a way, when people say the U.S. can't find buyers of its treasuries, it's actually finding it. It's going to be stable coins. Stable coins are going to replace any foreign holder of treasuries, because...
Is that a temporary situation? Like once you do that to a certain level, then sort of living in its own universe?
True. It depends. I mean, stable coins are $250 billion today. The total circulating supply of dollars is in the nearly 10 trillion. So stable coins can grow. A lot of stable coins transactions happen outside the U.S. So dollar dominance could actually be much higher in a stable coin world. But the main thing is it's at 4.2% the 10-year. And I think that means the bond market isn't as concerned. I mean...
Right, but we thought that the bond vigilantes were going to say, no mas, we're not doing this.
Yes. I think the bond vigilantes are essentially correct. The U.S. should not be running a deficit like this. But for whatever reason, we're not at the levels yet where debt sustainability is a question.
Could that change? I mean, it's weird. When these sentiment changes come, they usually come without warning.
That's right. Bond markets run on confidence. So there may be a moment where the bond market loses confidence. As long as the dollar is...
Jamie Dimon's worried about that.
Yeah, and you should pay heed to Jamie Dimon, because he has his finger on the whole economy.
Where you still look at your year-end target is at 6,600 still? So that's up about 8% from where we closed on Friday?
Yeah, I think that
Now, the important thing you got to understand about the discussion they just had there about, the bond market eventually freaking out about all this is I've been hearing this be talked about since I got in the market 16 plus years ago, constantly, right? And sometimes it gets talked about a lot more than other times, but the moral of the story is this is always talked about. This like day of reckoning, and it might eventually come, right? Bond market eventually like had enough, and treasuries just go crazy, and no one thinks the U.S. can pay debt, but that's the same argument that's been made since I got in the market 16 plus years ago. So just understand that it's nothing new today. It'll be talked about again next year. It will be talked about every year. Some years are going to be very seriously talked about, right? But the moral of the story is the U.S. just buys its own debt, and it's just in such a great position all the time. It's got the strongest companies, it's got the strongest economy in the world, it's got the strongest defense in the world. At the end of the day, it's the best place to play.
Reason people don't think there's more upside, I think there's upside to 6,600 because the PE of the market
Got the best banks, got the best stock markets,
can go up a lot. We already had 5 shocks. We had COVID
It's got all the companies that are leading in the next generation of technologies, AI, right? Software, hardware, everything.
shock, the supply chain shock, the inflation shock, the Fed fastest hikes in history, and then we had the tariff shock. So 5 shocks in 5 years.
5 years, yeah.
And earnings kept growing. If this was like
True.
a stock, we'd say, look, if you tried to kill it 5 times and it still grew earnings, we would put a much higher multiple on it.
Jim Chanos was talking
fair.
on Bloomberg
It's
the other
fair.
day and said that what we're seeing right now in AI reminds him of a lot of ways in the dot-com bubble. Now, the numbers and the earnings are very different, but he was talking about the Ciscos and the Lucents and some of those companies that were selling the things to shore up the internet. And I think he's looking at all of the CapEx spending that's taking place and saying it's great for right now, but it could change drastically and relatively quickly too.
Yeah. I was a tech analyst during that time. I think it's very different. And we have to remember the internet boom was companies like Yahoo creating web pages that were raising venture capital funds to create web pages. So the purchase of the equipment was based on creating web pages.
Right.
AI has use cases like replacing workers. So you have true dollars for a company to measure how much they're saving. And so until we get to the point where AI doesn't save you any money,
Right.
then it's a bubble, but
Because
maybe
there
it's
are use
undervalued.
cases right.
Yeah, so, this is a debate that's been talked about so many times in recent years. In recent years, really since everybody started talking about AI heavily in 2023, right? AI was talked about before 2023, but obviously since 2023, it's been talked about very heavily. And the moral of the story is, as long as companies can get positive ROIs, and this they'll continue to spend. And positive ROIs mean different things for different companies. Some companies, it's about market position. Like some companies are spending heavy now, so they can be the premier thing in AI for whatever thing they're going after, right? Meta is a different thing than what Google's going after. Google's going after a different thing than maybe OpenAI is going after. OpenAI is going after a different thing than Microsoft's even going after, right? And Microsoft owns a huge portion of OpenAI. And Microsoft's going after a different thing than maybe Salesforce. Like everybody's got their different angle, and Salesforce is a little different than Palantir. So as long as it's helping companies save more money than they're spending, or it's helping them get in a better market position for the next decade, right? That's what it's going to come down to. And so, you look at Palantir, like people are going to continue to buy Palantir software and sign up for 3-year and 5-year deals for them. As long as Palantirs continue to save them much more money than what somebody's, like if somebody spends $10 million a year on Palantir, but it helps them save $20 million, they're going to stay signed up for Palantir's products, right? If it helps them make an extra $20 million a year and they got to spend $10 million, they'll make that ROI investment, right? Meta's going to continue to buy all these NVIDIA chips and AMD chips and things like that, as long as it's helping them show even more relevant ads to folks, right? Get time spent on app up, which means more money spent, better ads for their folks that are, actually advertising on there, all the small businesses, mid-sized businesses, and large businesses, because that means they'll spend even more money if the ads are performing even better. This is what it comes down to. But eventually, could they start getting diminishing returns? That could happen, right? And then that's when the whole AI cycle slows significantly. It doesn't stop. Just like the internet didn't stop, but you go through a major slowdown cycle. And that's going to eventually happen. What year does it happen? It's going to be probably a multi-year thing. It'll probably be a 2 or 3 year major slowdown in terms of AI spend. I mean, it could be 27, it could be 28, it could be 29. It might be into the 2030s. I don't know. Like, it's not 2025 and it's not 2026. That I do know. Is it 27 or 28? Maybe. Probably not, but maybe. Is it, 2029, 2030? Then I would say there's a higher probability eventually. You get to this major slowdown cycle where it's like, whoa, and then there'll be a multi-year cycle, just like the internet bubble when that popped, right? But yeah, I mean, between now and then, there could be a big party to happen.